There's about 4.4 million US citizens living outside of the United States, and that doesn't include military personnel. And about 100,000 of that 4.4 million live in Australia. And the US taxes all of their citizens, no matter where they live, on their worldwide income and assets. This is called, for our audience, Citizen-Based Taxation. And there's only two countries that do that, Eritrea and the United States. The rest of the world taxes, it's based on residency-based taxation, where you are. So can you explain to our audience in simple terms what the difference is between citizen-based taxation and residency-based taxation?
Sure. Yeah, residency-based taxation is pretty easy, and it's what a lot of people assume the U.S. is doing, where you, U.S. citizen, you move to a country like Australia, you be here and you don't have a specific end date or anything like that, you're here indefinitely, and you think about it and you say, okay, I should be done filing U.S. tax returns unless I've got assets earning income in the U.S. But for my salary and wages or my business that I'm running in Australia or anything like that, U.S. probably wouldn't need to touch any of that in their tax return, and so they won't need to include or even file a U.S. return for that. In simple terms, that's residency-based taxation, the theory that you're no longer a resident of the U.S. because you've moved outside the U.S. Citizenship-based taxation says, nope, you're a citizen, and so you're always a resident of the U.S., and therefore all of your worldwide income has to be reported.